Let's practice classification and presentation of current assets on the balance sheet. Before we start, subscribe to our channel for more videos.
In this practical problem, we will analyze Franklin Corporation and the data from its trial balance as of December 31, 2023. Here you see a list of items from trial balance, indicating category and amount. Our task is to prepare current assets section of the balance sheet, listing items in proper sequence. Let's start from the reflection of theoretical knowledge. The current assets section of a balance sheet includes assets that are expected to be converted to cash, sold, or consumed within 1 year. These typically include cash, accounts receivable, net of allowance for doubtful accounts, inventory, and prepaid expenses. Cash is listed first, since it is the most liquid asset, with its value taken directly from the trial balance. Accounts receivable is next. As you can see, accounts receivable balance and allowance for doubtful accounts are given. Therefore, we need to calculate net value of accounts receivable.
The net value of accounts receivable is calculated by subtracting the allowance for doubtful accounts from the gross amount of accounts receivable. Net accounts receivable value is calculated as follows: $120,000 minus $10,000 equals to $110,000. Net amount of accounts receivable to be presented under current assets on the balance sheet.
Inventory is also included, as it is a current asset, expected to be sold within the year.
Prepaid expenses, which might include prepaid insurance or prepaid rent, are also listed, because they are consumed within 1 year.
Patents and accounts payable are excluded. Patents are not a current asset. They are intangible and long-term. Accounts payable is a liability, not an asset.
This arrangement, which you see here, reflects the proper sequence for reporting current assets on the balance sheet. The total current assets is the sum of all the listed current assets. Thank you for watching. Subscribe to our channel not to miss new videos.